investors and traders, and welcome to the weekly market report. I'm AJMonte, Chief Market Strategist with StickyTrades.com, and we are hitting home runs up, down, and sideways. If you tuned in to last week's report, you will have known that I set my downside target on DIA at 333.78, and then I did something that I don't normally do, and that was on Wednesday. I drew another zip line, and I said that we could bounce. That's exactly what happened. Diamonds hit my upside target right there of 332.36. And before all of the bulls get excited out there, let me put a warning out. This is the very first warning I have ever put out in my entire career of 40 years. What is the warning? A collapse. I do believe that we're going to see a collapse in the market. And I've said this before, I'll say it again, that will shock you. So do not fall into this bull trap, because although I think next week we could see a little bit higher, there is going to be heavy resistance up here at around the 340 level, as this former support, now turned resistance, is coinciding directly with that 20-period moving average. So again, to the upside, target is 336.79. Keep an eye on the volume. I do believe we're going to see a drop in the volume Monday and or Tuesday, and then we'll have to see what happens at that resistance point. So again, upside target for next week, early on, 336.79. Looking at IWM, did the same exact thing. We hit the downside target from last Friday of 175.49. I put an upside, short-term upside target there, 173.14. We hit that and closed almost exactly on that, 14 cents away from closing exactly on that. And that is pretty incredible. These charts are amazing. I would love to take credit for that, but all I'm doing is reading the evidence to you and teaching people how to do the exact same thing. Look down below. We have the CCI as a buy signal. Stochastic is hinging up, and I do believe we're going to bump our heads right up against that level right there, which is former support, now turned to resistance. So let me draw my zip line right there of 174.54. Option traders, we want this to be right up close to 175, and our spreads will be hitting the max credit taken in next week. So stay tuned. Monday's going to be a very busy day for me as I put out the notifications to our option members. Not too late. If you're not a member yet, you can go to StickyTrades.com, subscribe to even our most basic membership, and you'll have access to my Wednesday rapid fire analysis. 1 hour of power. 66 stocks in 1 hour last week. We had a great time. All right, so again, the upside target on IWM right there is 174.54. Moving on to the Qs, ticker symbol QQQ. We've got a battle going on at number 5 fan line. Remember, I talked about that. I said we would hit the downside target from last Friday. We did that at 357.92. Then I put a very slight upside target at 360.34. And where are we? We're right at the gap fill point now. Because that is a bullish engulfing, I'm going a little bit higher. Let me zoom in here for you. Going a little bit higher because we closed over that 20-period moving average on higher volume. Oscillators are going higher. But once this volume starts to drop, guess what? We have resistance right here. I don't want to draw too many lines, but that too, former support broken by that bearish engulfing candle, will turn into resistance. Our members hear this from me over and over and over again because I teach through repetition. As I've always believed, repetition is the best teacher. Those of you who are following me each and every week, you know I say the same things over and over, but I have different price targets. We're reading the candles. We're looking at volume, oscillators, divergences, gaps. We're looking at all that. It's not rocket science. You could all learn this and be right 70 to 80% of the time in your forecasting as well. Just hit the subscribe button and then you'll hear more from me in the weeks to come. So again, last report on here, the target is 367.80, and then keep an eye on the volume. Looking at SPY, we got the S&P 500 ETF. What happened? Yep, we hit the targets again. Downside target was hit at 424.46. Wednesday, I drew the zip line right there at 426.25. By the way, I'm going to be erasing the Wednesday zip lines for next week because I like to keep my targets on, but I don't want to confuse anyone with these crisscrossing diagonal lines. It could be a little confusing there. So next week, I'm expecting a drop in volume on SPY, but a little bit higher. Where to? Up to that moving average. My upside target for SPY is 432.09. what's happening is the 20-period moving average, while the price is still below that average, that moving average is being drawn down. So by the time this price gets up to that level, the moving average will be meeting it right at that resistance level. So again, 432.09. Taking a look at the VIX. What did we have? I had a pretty aggressive upside target last week on the VIX. If you watched that video, great, you got it. If you didn't see the video, I would challenge anyone to go back over the last 4 weeks and watch these in sequence. You could see just how accurate these charts are with hitting price targets. We're hitting 100% of the targets over the last 4, almost 5 weeks. 100%. No one does that, and that's how powerful these charts are. Upside target was hit in 1961. Then on Wednesday, I said that we could pull back. Guess what? We hit that target today at 1785. What do I think is going to happen with the VIX next week? I think it's going to continue just a little bit lower to the moving average. So I'm just putting a little bit of an extension there. The VIX, I believe, is going to get down just below 17 at 1696. Look at the oscillators down below. They're about to cross that momentum line. And then we have all kinds of support for the VIX down in this area. Now, I've had a lot of requests for different ticker symbols, and I really thought about this. The only one I really want to go off on from time to time, because so many people are following me with my trades, is SLV. Wednesday is reserved for our paying members to get their stocks analyzed. So for those of you that submit ticker symbols to me, I know there were requests for TLT, TNX, some of the other ones, even gold, but I have to honor our members who pay good money for their memberships. And this is where I'm going to leave off here with SLV, and then I'll get to the geopolitical news. Last week, I put an upside target of 1988. For those of you who have been following along, I sold my silver back here. I bought it all back here. It's moving up. I said it would move up. There is still a gap up to this level. I think there is a chance that it could get up to fill that gap. So I'll even go so far to extend that zip line out, putting an upside target of $20.29 for SLV. Stay tuned. I'll try to report on that one as well on Wednesday. So what's happening? Well, the banks are suffering once again. I think the next big shoe to drop is going to be a collapse in the banks. And no one is going to want to tell you that, especially the institutions, but look at the evidence. $870 billion in deposits have left the banks since the Fed began to raise on interest rates. The banks need those deposits to balance their books. What else do they need? They need to loan money, right? So they need money in the bank so they can go out there and loan it. That's their bread and butter. If they're not loaning money, if they're not pushing money out to the consumers, to the mortgage holders, they're not making any money. When they're not making money, the banks suffer. You can see that excess savings are depleted for the bottom 80% of the households out there. Why? Because their incomes are dropping, times are getting tough, inflation is still there. They're tapping into their bank accounts to pay for their electric bill, their Netflix subscriptions, their phone bills and such. And what's happening, once this is gone, they start borrowing against their credit cards. Credit card debt goes up. And then what happens? Well, what follows there is bankruptcies. And I'll get to that in a moment. Look what's happening from CNBC. More mortgage applications are being rejected for insufficient income. Remember what I just said here. Look at the white line. Incomes are dropping. Well, if the incomes are dropping, they can't qualify for mortgages. So we got a bubble there too in the real estate market. We got a problem with the banks not able to loan money. We got a problem with the consumers because they can't get their mortgages. And now what? Now the world is in trouble because the economy is going to come crashing down. I'm not embellishing this, folks. I'm not a fearmonger. I'm a realist. I'm also an optimist. Believe it or not, I'm not a perma-bear. I've been talking about the downside targets of the March 2020 lows for a very long time, and there are others starting to join me in this, particularly Harry Dent. Now, look at this chart right here. This is mortgage applications are dropping like a rock. We haven't seen numbers like this since 1996, and it's still going down. That's going to put a hurting on the real estate. It's going to put a hurting on our economy. It's going to put a hurting on the banks. And when you think it's bad, look at this one. Bankruptcies are on the rise. I started reporting on this a couple of weeks ago. I made mention of this last week. This is the chart that's giving you the visual representation here to show you how much different 2023 is from the 3 previous years. Bankruptcies are on the rise. That's going to hurt the regional banks because they're holding a lot of these loans from the small businesses, and the dominoes continue to fall. Here's another revision, folks. Look at that. U.S. consumer spending revised lower, not by a little bit. We had a drop of about 80% in consumer spending from one quarter to the next. Absolutely incredible. Absolutely incredible. Folks, on the bottom right corner of your screen, there is a red and white subscribe button. All you have to do is click on that. Like it, subscribe, hit the notification bell, and when the alerts come out, when the publications come out, when the videos come out, you'll be notified, and I'll talk to you on the next video. So long.